Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, August 1st, 2023. So, listen, before I get into the regular report, which I'm going to in a second, I just want to walk you guys through signing up for the gold report because I've been getting a real lot of responses that people are having issues and it's confusing. So, this is basically what you're going to get when you click on the link. You're going to bring to this thing. You're going to hit purchase this content. It's a one-time fee, $49.99. It's going to bring you to this level. From here, I'm going to pause you because hang on. Okay, so what it's going to ask you, it's going to bring you to this level, and it's saying you have to pick a membership level. You just have to put and fill out a username and password. You're not paying for any. You're only paying for the initial one that you're purchasing. So what I'm going to do is put in my username. I already created it. Okay, so you put in whatever username you want, put in your password, retype the password one more time, the normal stuff that we have to go through to sign up for this stuff. But once you do that, then you put in your email address. I'm just going to pick one of mine and confirmed. And now you put in your credit card number. That's going to put it whatever you want on it. You hit submit checkout. Now, what I'm going to do is I'm going to log in and submit this. So hang on one second. Okay, so once you finish your checkout, it's going to bring you to this page here. This is our special reports. You're just going to click on reports. You're going to click on special reports. And then from there, hang on, you're going to have to scroll down. I'm gonna have our developer fix it, but you want to just click on this last one right here because you already bought it. So you just see it says view now. When you click on it, it will then bring you to our report and you get to read everything. So I just figured it'd be easier doing that way just because I've been getting so many questions and it's been driving me nuts. So, excuse me, let's get to our regular report here. So, this is actually a chart of gold, the futures. And I'm going to show you what's inside the report, how I'm viewing things right now. So with this right here, this is the breakout line, right? So the bulls got to get above that. If they do, in the report, I give my price target. They're pretty big, pretty high up there. I also have the stocks that I think are going to really outperform. But anyway, this is what they have to get through. But being right here, the weekly chart, we have bearish divergences here. So when we made this high, we saw the divergences there. So what that is telling us is that we should see some backing and filling, probably down to test this area here, 190. Then we're looking down to the 182, and then possibly down to the 176. So this is in the report. I'm saying, I would not be chasing here. I'd wait for things to come back down again. But now let me show you the daily chart. Okay, so now down when we're looking at the daily chart, you can see when we were making these lows and we went right down to the 200-day moving average, we had bullish divergences. So that's what's playing out right now. So I'm still like we're in no man's land right now, and that's why this gold report for the long term, I really do like it, just because I'm not telling you guys have to get in now. We're screaming higher. I actually think we're going to be doing some backing and filling. So let's get to our regular charts here. And the one I'm gonna put out right now that I'm gonna start. I know I'm going a little kind of all over the place, but this is a chart of light sweet crude. And one thing that I don't know what they're calling it, Bidenomics or whatever. I don't know. Whatever it is, just don't call it economics because it's not. They're touting that inflation is going down. Well, inflation was kind of at its lowest when we were. I'm sorry, this isn't even the right chart. Okay, this makes more sense now. So lights, when we were down here, gas prices had dropped a lot since they were at this, all the way at the 123 level, and we bounced back. But the thing is, we have bullish divergences right now, and this is going to be a breakout. If the bulls can get above this 82, 8,300 level, they're going to have a quick move up to the 93. So here you see right here, we're trading right around 82. If it breaks above that, then we're heading up to 92 again. We're going to see gas prices back at $4. And the reason why this is kind of important is that the everybody that's sitting there and saying, and I'm hearing it more and more that the Fed is done raising rates and they're going to start cutting rates. they're basing it off of oil and gas and stuff being down here. But if we see oil go back up here and gas above $4 a gallon, guess what? Inflation is going to be back up at 7%, 6%. So, the fact that these people are looking for the Fed to start cutting, I just don't understand it at all, and why they would even their firm would even allow them to say that, because it's I just don't see that happening anytime soon. And they even said it's probably not going to be until sometime in 2025. Here's the bearish wedge still in play. Nothing has really changed as far as anything else. The bears need to get it through this 45.25 level. I know that we had a little bit of a hiccup today because I forget which credit agency it was, but downgraded the United States credit, and that did send futures like dropping hard, but they've rebounded since. So I'm not quite sure if it's going to mean anything. But right now, the Bulls need to get it. The Bears need to get it through 45.27. If they do, 44.82 is support, as well as the 44.50. This is the main line right here. The Bears need to get it through this level to see momentum pick up, and then have us trading down near the what the wedge is suggesting right there. We have bearish divergences, so that's in play on the hourly chart as well as the daily chart. And if we just take a look now, if the bulls can get it above this 4607, I've been saying the next top is probably going to be right around that 4615. So you want to keep an eye on that until the bears can break through this. The bulls may try to just kind of get even tighter up into this little tweezer right here. But once it breaks, really the pattern's looking for a move down to the 4200, possibly even 4100. So it's not a bullish pattern where you want to be listening to all these people on TV saying that it's the start of a new bull market because inflation's gone, when inflation's probably going to start going back up again. So really nothing to show on the 15-minute chart. You can see that we've had a couple gap up and downs, and we've really done absolutely nothing. Here's we had a gap down. I mean, a gap up on this. That was on the 28th. Then if we just start looking around here, you can see we're really going nowhere. So until the bulls can get it above the 45.93, or the bears can get it through the 45.28, honestly, just trade what's in front of you right now. Long term, I still believe that this market is heading lower. It may take a day or two or three to start up, but I don't know what the catalyst is going to be, but something's going to trigger it. So with that, hope you guys get that gold report, because like I said, there's some pretty good stuff in there, and most of the three of the stocks I'm anticipating on a bare minimum to double. One could go, it's already up 900% from the beginning of the year, but it has really, really strong earnings, and it's a kind of still a low price stock, and it's one of the things that you can do pretty well with. So with that, have a great night, and I'll talk to you guys in the morning.